Good morning, students. Today we are going to learn about new economic policy. The new economic policy of India was launched in the year 1991. This policy opened the door of Indian economy for the global exposure for the first time. The new economic policy, the government reduced the import duties, opened reserved sector of the private players, devalued the Indian currency to increase the export. This is known as LPG model of growth. The new economic policy refers to economic liberalization or relaxation in the import tariffs, deregulations of markets or opening the markets for private and foreign players, and reductions of tax and expand economic wings of the country. New economic policy. New economic policy was introduced by Vladimir Lenin in 1921. The new economic policy was a radical shift of Bolshevik economic strategy. It eased to harsh restriction of war communism and Bolshevik economic policy during Civil War and allowed to return the markets and petty trade. The economy of India had undergone policy in the beginning of 1990s. The new model of economic reforms is commonly known as LPG, known as privatization, globalization and liberalization. These economic reforms had influenced the overall economic growth of the country in a significant manner. In November 1927, Joseph Stalin launched his revolution from above by settling two extraordinary goals of Soviet domestic policies, rapid industrialization and collectivizations of agriculture. Objectives of new economic policy. The main objectives behind the launching of new economic policy in 1991 by the Union Finance Minister Dr. Manmohan Singh was stated as follows. First one, the main objective was to plunge Indian economy into an era of globalization and to give it a new thrust of market orientation. Second one, the new economic policy intended to bring down the rate of inflation. Third one, it intended to move towards higher economic growth rate and to build sufficient foreign exchange reserves. Fourth one, it wanted to achieve economic stabilizations and to convert the economy into a market economy by removing all kinds of unnecessary restrictions. Fifth one, it wanted to permit the international flow of goods, services, capital, human resources and technology without many restrictions. Need of new economic policy. The main objective was to plunge Indian economy into an era of globalization and to give new thirst of market orientation intended to move towards higher economic growth rate and to build sufficient foreign exchange reserves. Economic reforms refers to fundamental changes that are launched in 1991 with the plan of liberalizing the economy for quickening its rate of economic growth. The Narasimha Rao government in 1991 started the economic reforms in order to rebuild internal and external faith in the Indian economy. The reforms intended at bringing the larger cooperation of the private sector in the growth method of Indian economy. Policy changes were proposed with regard to the technology upgradation, industrial licensing, removing of restrictions on the private sector, foreign investments and foreign trade. The essential features of economic reforms are liberalization, privatization, globalization, commonly known as LPG. Branches of new economic policy. LPG stands for liberalization, privatization and globalization. India under its new economic policy approached international banks for the development of the country. These agencies asked Indian government to open its restrictions on trade done by the private sector and between India and other countries. Economic liberalization is often associated with privatization, which its process of transferring ownership of outsourcing of a business, enterprises, agencies, public service or public property from the public sector to the private sector. The essential features of liberalization were it laid stress on freedom of business and industries from unnecessary controls and restrictions of the government. Second one, emphasis was laid on simplifying export and import procedures. Third one, restrictions on the movement of goods and services was removed. Challenges of new economic policy. Due to various control, the economy became defective. The entrepreneurs were unwilling to establish new industries because laws like MRTP Act 1969 demotivated entrepreneurs. Corruptions, undue delays and inefficiency risen due to these controls. Rate of economic growth of economy came down. Partition and consequences. Partition was marked with a large-scale common violence. Partition not only led to the divisions of assets but also created huge refugee crises followed by the origin of Kashmir problems. Mass poverty. At the time of independence, the include of poverty in India was about 80% or about 250 millions. Famines and hunger pushed India to take external help for food security. Illiteracy. When India gained independence, its population numbered about 340 millions. The literacy level then was just 12% or about 41 millions. Low economic capacity, stagnant agriculture and poor industrial base. These are the challenges of new economic policy. Next one, what are the impacts of new economic policy? The new economic policy resulted in radical changes in the structure and direction of Indian economy. The direction tends towards market economy and globalization of the country. The major objectives of new policy is to make Indian economy progressive and also to make Indian economy a part of the world economy. Reforms led to increased competition in the sectors like banking, lead to more customers' choice and increased efficiency. It has also led to increased investment and growth of private players in these sectors. Reforms led to increased competitions in the sectors like banking, leading to more customers' choice and increased efficiency. It has also led increased investment and growth of private players in these sectors. Thank you, students.